There's a lot of points to consider, whether or not you should put fixed or variable. And those points revolve around things that both relate to the property and your own personal situation. It depends if it's a kind of a value-added acquisition or a stabilized acquisition. It depends whether you may be put an expansion on it or not put an expansion on it. It also can depend on your personal situations that revolve around personal recourse or non-personal recourse. Whether or not the financing is going to be more of a generational decision or a decision at the time. Whether or not you may want to sell the building short term or whether or not you might not want to sell the building short term. All these banks only really deal with people on a variable rate basis because they like to match their funding with their deposits. And because the senior living and healthcare business isn't funded by the typical longer-term fixed-rate lenders like insurance companies or the securitization market, it's really only left to being funded with fixed-rate loans by either HUD or Fannie Mae and Freddie Mac. So even though HUD's production or Fannie's and Freddie's seems quite large independently, from a whole sector point of view, it doesn't really compare. So there's a lot more variable rate financing getting done. Probably 85 or 90% of HUD's volume is on skilled nursing facilities. And that's what they're very comfortable with. They've had very good outcomes doing skilled nursing. They're very comfortable underwriting skilled nursing. HUD is very comfortable with the primary payers in skilled nursing, which is Medicaid and Medicare. Whereas the other more government-related funding sources, which are Freddie Mac and Fannie Mae, have a different perspective than HUD, where they feel much more comfortable with the non-government payers and the lighter care, if you will. So their whole business model is orientated towards assisted living, memory care, and independent living. Rates are both a component of some of the indexes, like swap rates or U.S. Treasuries, as well as sort of the fear protection. And even though rates have dropped, in the last 60 days, on a real basis, our markets, which for long-term rates, which is primarily HUD, hasn't really seen a drop, because even though rates have dropped, the spreads with the markets to fund HUD loans has increased, and that's because of the fear of rising interest rates. So once the market, forget about the powers in the Fed and the people that make certain forgetting about what they say, it's the fear that's kept rates higher over the last 30 to 60 days, in our opinion. And we think once this might slow down, that rates might actually trend downward.